All right, my friends on the journey, let us dive right in. We are going to talk about our cycles, our inventory cycle, investment, and other cycles. Well, first off, let's talk about our goals here. I'm going to reiterate these throughout the course, throughout the lesson as we go. What are our goals for, and we said this when we were dealing with the revenue expenditure, all those other cycles in the other lesson as well. Well, our goals here, we want to differentiate between the different auditing assertions. So first off, right, making sure we understand the difference there, that these are assertions made by management. They're asserting that the financial statements are complete, they're accurate, they're properly valued, etc. We'll dive into those. Again, we're going to see some of the same slides from the other lesson. So if you are such an expert at those, then you saw them in the last one, great. If not, please make sure you're taking a good look at them. It's just good extra practice, and it does relate to these other cycles as well. We want to apply the correct auditing procedure to test the assertion, a lot of memorization, but a lot of understanding as well. And lastly, we want to understand the process and flowchart of each cycle. I want you to be able to close your eyes and envision how the inventory cycle works, the investment cycle, the types of people working in these departments, because you have the inventory department, you've got different individuals working in conjunction with each other all around. We're going to talk about the PP&E cycle, the payroll cycle, a few other, we've obviously got the term other cycles here, some in addition to what we see here. Let's dive right in, talk about the inventory cycle. Well, this is the process that companies use to track their inventory and ensure that they have the correct level of stock on hand. This cycle begins when a company orders new inventory. So all the way from just issuing a purchase order, trying to buy something online, just call up someone, say, I need to buy a bunch of sheets of metal so we can make our products, and ends when the inventory is sold to customers. So all the way, very extensive process, very much all the way up until the point, and then kind of dives into the cash cycle. A lot of these cycles very much kind of go hand in hand with each other, because the cash cycle is going to be how you collect the money from the inventory cycle, and this obviously goes hand in hand with the sales cycle as well, the revenue cycle, because you're trying to sell these products to make money. Next up, the investment cycle. This is the process that companies use to invest in new projects and ventures. It doesn't have to particularly just be buying and selling stocks, right? This is going to be investing in the company. If we think back to financial accounting, you've got your statement of cash flows, and that's got operating, investing, and financing activities. Now, it actually goes in the natural progression of a company, the reverse. You finance first. You finance through debt or equity, raise money through that. So you get $10 million from financing. And then you have investing. You take that $10 million, buy a machine that manufactures some goods, and then those goods, you sell those goods, and that's your operating cash flows, your operating cycle. So that's the investment cycle. The cycle begins when the company decides to invest in a new project and ends when the project is complete. This is going to deal a lot with buying, and kind of ties hand in hand with the PP&E cycle, as we'll see. Now, this PP&E cycle is the process of acquiring, maintaining, and disposing of long-term assets such as buildings, equipment, and vehicles for a company. This cycle is going to begin with the planning and budgeting for a company's long-term assets, followed by the acquisition of the assets. Once acquired, the assets must be maintained and serviced regularly. Now, finally, when the assets have reached the end of their life, they must be disposed of. All of these components are super important. On the financial statements, journal entries, think about how we have accumulated depreciation, got depreciation expense. We need to ensure that everything's properly recorded with our contract count, net book value, everything like that is going to tie in. We're obviously not going to dive too much into the numbers. We've got that on the financial exam. We got a lot more stuff like that. But this is you as the auditor understanding how these cycles work, so you can make sure that the company's conducting their cycle properly. And then if you see anything wrong with it, well, that's part of your job as an auditor. Very important there. Taking a good look. Let us continue on. Like I said, we got a few other cycles here. We got the payroll cycle. This is the process of managing employees' wages and salaries. The cycle begins with the identification of the work to be done and the calculation of the wages and salaries due to the employees. This is followed by the collection of the necessary supporting documents and the preparation of payroll. Payroll is then submitted to the payroll provider. We'll think of like ADP, who processes and distributes the payments to the employees. Now, finally, the payroll is reconciled and the necessary taxes and deductions are paid. We'll see that cycle and how it all flows through. Lastly here, the financing cycle. This is the process of obtaining and managing the necessary funds to support the operations of the company. As I mentioned, you've got that natural progression where you finance, then you invest, and then you operate. The cycle begins with the identification of the sources of the funds, including debt and equity. How are we going to raise money? Are we going to go to the bank, try to get some debt, or are we going to sell parts of our company through stock? You may have seen this if you, hopefully you went through the revenue cycle before this, just going in order as we've got it here. Well, this is pretty much continuing on from there. I have the same screenshot there. We have our revenue cycle, expenditure, cash cycle. We saw those. Now, getting more into inventory cycle, this is going to include perpetual inventory, physical counts, and manufacturing costs, just some general items that we're going to need to have circulating in our mind just to get you in the right mindset. When we're dealing with the investment cycle, this is going to include investments in debt and equity and the income received from those investments. Now, this could be something like I said, like buying stock. It doesn't have to be. A lot of times it won't be, especially if you're a manufacturing company. But this could be buying stock, receiving income from that stock, buying a machine, using that machine to create products. And then lastly, other transaction cycles, PP&E, payroll, financing cycle, all of that. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.Examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.